Good morning, everyone, and welcome to the European crossover webinar. And we have seen a further bounce in equities. We have come into some key levels. Tired of the guy squawking in my ear. Hang on a moment. So I did go on and post or share some posts. If you take a look here on the NASDAQ, you can see here that we've made it up here to the upper zone of this 92.75, and just about coinciding with the 127% of the extension from these two areas, two significant highs and lows. Also, when we look at the SPOOs, you can see here that we've made it right up here to the 88%. And I've also come into this one little area here between 29.39 and 29, almost 48, but 42, if you look here, is a pretty key high mark in this area here, right there. You can see here that we'd also even exceeded the 161% of these two areas here. So just above this 29.39 is fairly key also. So we've stretched quite a ways here. Also, when we look at the Russell, we've also come into two key fib confluences, 161% extension from these two significant highs and lows, as well as a 78% extension here at 1341. And if you see here, we're close to the upper part of this zone. We've already had a pretty good stretch here. We might be able to push a little bit higher here as we come into the U.S. cash equity open, but I'm not looking for too much higher here. We have a lot of economic reports this week, and I think that once we've had the risk, it was pretty amazing that it already rallied as far as it had and even extended a little bit further. If you look at the Dow futures, same thing, two fib confluence, 161% extension of these two key high and lows, as well as a 78% extension. And we've made it actually right there to the tick, the 24,465. So once again, I think a lot of confluences here. I think we've come quite a ways, and I'm going to be looking for a pullback. Like I said, we may try and push up a little bit higher in the cash U.S. equity open, but I think we've had a pretty good stretch. I thought we were going to pull back on Friday. We didn't. I was still able to scalp out with a few minor gains, but them at it, perfect, fine. Take it up a little bit higher, and I think this is we've had a pretty good run. Going back into the SPOOs. They still extended it. Look, like they made it all the way up beyond to the 29.30 and then even further. And here we are. So once again, like I said, we've had a pretty good little stretch. We'll see what happens here. I think that they can probably push a little bit higher into the cash equity open or in this area level. And then I think we should begin to start to ease back, or that would be the risk here. I would think. We shall see. And let's see, we'll look at the economic calendar. Coming into today, nothing here in Europe that I'm seeing here, but we do have employment trends at 10 a.m. Eastern, and it appears to be the only thing other than, we do have, which we did, the guy was squawking about that when it came on, Italian industrial output. That's going to be it. And then, into the next session, we'll have NBM business conditions. And then tomorrow, really nothing out of Europe also. Do have Mexican industrial output and then core CPI here in the States. Then on Wednesday, we do have a lot of UK data, manufacturing output, construction output, GDP. And then we do have industrial production for the Eurozone. Really about the only data for the Eurozone. And the States PPI. And then CPI in the Euro area on Thursday. You can see here where we have 2-day VWAP and single-day VWAP. And we're going to move into the news. Okay, the dollar gains as focus shifts to life after lockdowns. The dollar rose against the yen on Monday as moves by the United States and other countries to reopen their economies raised hopes for a quicker global recovery from a deep recession triggered by the coronavirus health crisis. Sterling was little changed against the dollar and the euro after the British Prime Minister PM Johnson outlined plans to slowly ease coronavirus lockdown restrictions. Data on Friday showed the United States shed 20.5 million jobs in April, the steepest plunge in payroll since the Great Depression, but traders are starting to look past such grim economic numbers as they bet on future growth. I mean, that's fine. I think that's fine, but if you look at indexes, to the extent they come, I think a pullback is certainly going to be in order once people come back and they find out people aren't coming back to the extent that they thought. The bad news about the U.S. labor market was pretty much as expected, and people now assume that economic activity will restart sooner rather than later in the United States and Europe. We don't have to be so bearish on the dollar. When the dollar often trades as a safe haven asset, gains its reserve currency status, it has only recently developed some positive correlation with Wall Street. On Friday, Wall Street indexes rallied to find the gloom from one of the worst U.S. job reports in decades. Australian dollar, which is often traded as a proxy for risk because of its closer ties to China and a global economy, has recovered from the early fall and rose. Sentiment for the Kiwi is likely to improve after Prime Minister Jacinda Ardern said she will ease coronavirus restrictions on Thursday. And the pound was a little changed. Government wants the rest of the UK to take some same approach, but they were immediate divisions. John's agreements government faced criticism over handling the pandemic. Not any real news there. So no real news there. Okay, let's go and move on. We'll get the Let's start off with the euro. So the euro closed Friday with a medium-legged doji, suggesting a pause in the downside move may be upon us with some short covering. Resistance will be 895 with support at 776. So you can see we're trading a very, very tight session, an excessively tight session. Look at that. Oh, let's go on and as I mentioned before, with the volatility that we've had, all the things are starting to slow down. I really don't pay much attention to news here on the currency markets. Just look at the levels. So you can see why the analysis is just pretty much hits the levels, no real reference to other things, because I don't think those other things matter. And I think some traders have had problems trading FX because they try and impart so much from the news, and the news really doesn't matter. It's just these markets are just trading on levels. That's all they're trading on. At least that's my take. Let's go on and move into the cable. So cable closed Wednesday on its own, target for the week in the bias chart level. Let me see. So that's not even what I was looking for. Let me pull up my analysis on the cable. Unless I accidentally put Friday. I mean, put that instead of Friday. Hang on. Okay, so cable closed slightly higher on Friday, but was contained by 124. Resistance will be 24.90, was supported 22.85. So go back in here. So once again, cable closed slightly higher on Friday, but was contained by 124. And that the resistance is going to be 24.90, was supported 22.85. Once again, you can see these currencies pretty much dead in the water. A moment. Let's go move on to the Aussie dollar. So the Aussie closed above 65 cents on its bounce back rally. Resistance remains 65.69. You can see here, once again, I mean, don't want to sound like a broken record. You can see it's trading just to the levels. So it just missed 65.69 by, looks like about 7 or 8 pips. You see what I'm saying? But so resistance remains 65.69 with support at 64.28. We're moving to the Kiwi. Friday saw Kiwi at its best closing level for the week. Resistance will be 61.65 with support of 60.36. And the high right now has been 61.50 or 61.56. So really just missed just by about what, 9 pips. Once again, like I said, I'm just going with the levels. Like I said, so I think that's just the best way, but everybody has their own way of trading. But to me, I just don't see the whole thing of getting all fired up about the news in this time that we're in. Markets appear to be, they're just trading on levels. So resistance will be 61.65. and support is 60.36. So the dollar CAD closed on and slows on Friday. Support will be 38.50 with stops below 38.40. Resistance will be 40.22. And God, this thing is just absolutely dead in the water. Look at that. Somebody wake up FX. So the dollar peso closed on and slows on Friday just above support of 23.60. Immediate support on a break will be 23.34 with resistance at 24. Oh, we just moved it off lower by 1 pip. Dollar yen saw a further move on Friday on its bounce back move. Resistance on Monday will be 730. We're on our highs at actually 723. With support at 634. And the dollar index closed on its lows on Friday into support level of 99. Well, I know that's, let me see, get that. I'm glad I saved the thing. I don't know why it doesn't save on that. Was that it? I don't even trust it. Let me go to my notes. Oh, that is correct. Okay. So dollar index closed on its lows on Friday into support level 99.11. Additional support is 98.81 with resistance at 99.70. You can see it's even pushing beyond the 99.70, but that's resistance. I mean, I guess you can go with the level, which we have here is 99.92. That's a level. I had 70, but respect the levels. Got it right here, 99. So it's 99.92. So we'll have to update that to 99.92 and go with that level, which that's what I'm saying. Just go with the levels. He's really had a good bounce back. And support was 98.81. And you can see that level coming across here, all the touches. You can see it almost working like a pivot. With that, we're going to move into the cross rates. So the Kiwi yen saw a strong counter rally to end the week. Resistance will be 65, 63. So far the high's been 65.80. I just once again went with the level, but followed by 66.03. Oh, okay. Support will be 64.61. So 64.61. After a 3-day successive sell-off in the euro yen saw a 2-day rally. Bears remain in control. Resistance will be 16.22 with support at 15.10. And you can see right there, I just went right with the level. And that's exactly where they went to. The high right now is 16.21. I put 16.21 too. That's nothing good I'm doing. I'm just going with the levels. So I mean, I'm not going to pay attention to news for the most part. All these markets are doing is trading levels. That's all they're doing. Move on to the euro odd. The euro odd continues to hug the lows. A downside break finds support at 64.81. Like I said, with the idea that they would push the lows. They haven't yet, but if they do, 60.41, and resistance will be, still, like I said, once again, we're pretty oversold if we do get that bounce to new lows, or not bounce, but a break to new lows. We're looking for support at 60.41. If they do bounce up, resistance will be 67.61. This odd has just been hanging in there like a rock. But I guess because equities are still so strong, so once again, support would be 64.81 on the break, because we're not calling for necessarily support at this moment because we think that they'll try and punch those lows potentially. And if they do, we're looking for support to come in at 64.81. And currently resistance will be 67.61. Let's go into the Euro Kiwi. Euro Kiwi closed the week on the lows. Support level is going to be 76.03. This is where the market can attempt to stave off bears, and resistance will be 77.50. Move on to the Aussie yen. So the ASEAN saw 2 solid days of recovery. Resistance on Monday will be 69.98. Has been 70.15, so they didn't get back past that. 69.98. I didn't even put the what was going to be the support. You can see this close right there. That's going to be support right there, and you can see that high, that open and close, and open there. You see that right there? That'll be support, which is going to be 69.33. A little bit close, but with that, we'll move on to the guppy. The guppy saw a 2-day bounce back to finish the week. Resistance will be 33.26. The high's been 33.23. Not bad, off by 3 pips. Once again, just going with the levels, not making this any more difficult than it has to be. 33.26. And support's going to be 31.44 if we were to get that break. Obviously now, not. We may even have to move this a little bit up higher since they did go with the upside and they're kind of topping out to that upside. Support is now going to be right there. Well, that's what we had, 31.44, so we'll stick with that. Well, that was what we had for Friday. And lastly, starting on, to close the week at new recent lows. Support will be 88.90. I haven't gone to the new lows yet. 88.90. And resistance will be at 90.96. And that covers the analysis for FX. We can jump back into the equities. You know, I'm looking for these things to tire out, and that's exactly what's happening at the moment. You see key area here on the daily at 29.41. With the 2-hour, we've come up to 29.42-ish. Right there is the 88%. We've actually made it as high as 29.46. Key area here is at 29.30. I talked about this on Friday when I was short. I said, hey, God, I was fortunate, I was lucky to be able to get out on a dip. And I said, hey, look, if they get past this area, they're going to make a run up, which I remember that's what I was looking for, an area to short, which was at 29.28, but I went no part of it late in the day. But I do remember about the Russell. I said, hey, if it gets past 13.22, then it's going to make a run for 13.30, which is where they went to at the time. But you can see we're pretty much overextended on this market. Look at that. I mean, what a heck of a bounce back. I mean, this is just, wow, amazing, you know, how far we've come back on this thing. So I think we've come too far. Getting a lot of, you know, key areas and confluences. You're seeing the same thing on the NASDAQ. Take a look here. We've gone past the 78% easily, but you can see here that we came not that far away from the 78%, but you can see the significance of 92.42, and you can see that's where they're struggling. We're going close, and that's on the daily. Let's take a look on the 2-hour chart. You see that? 92.37. We made it up to the top zone, top portion of the zone, 92.75. Confluencing with 93.04 for the 127% extension of this move. You see, a lot of confluences coming up here to the zonal top. It looks like we're just riding this trend line at the moment. We're going to move into now the other indices. You can see here we've turned lower here in the Russell. This is on a 1 minute. This bar here, that's a 200 moving average. And then we have obviously the quicker moving averages, but we can see here we broke below. It really opens the door for us to move lower. Going into the daily, you can see we've already had a pretty good run here. Moving into the 2-hour, we made it here just to the 1340. I had that level. Look, that's the previous high. We go there and we took it out by just a hair. Look at that. Look at that. We just took that out like just a little hair. We're starting to rotate a little bit lower. This is on the 2-hour chart. We look at the 30-minute. You can see here we've come into pulls back out. 161% extension of these two significant highs and lows. Also the 78% and up to this upper zone, which is 1345. But we just took out the 40 and we're starting to roll back a bit. See that? And also with this trend line. Lastly, we look at the Dow futures. And we're looking on a weekly. They've almost made it back up here to the 24,588. But when we take a look into the 2-hour chart, you can see here, same situation. Confluences of 161% extension and a 78%. And also with this level, the 24,465. Once again, just going with the levels, folks. And looking for a market that I thought should have pulled back on Friday. Actually, I was setting myself up for, I thought was going to be a good, those alarms and the FX and that people put is really annoying. And the trading view. But anyway, getting back here, at least when those alarms are blasting your ear. Getting back here, like I said, you can see these two fibs here, that confluence along with this level. Once again, we've had a phenomenal run. I think we're stretched. I think you probably stopped out. Obviously, I think even on Thursday you stopped out a lot of people. And I thought maybe on Friday we're going to see a pullback, but they rolled with them as they still have the momentum for the week. And that's what I'm thinking today as we come into reports for the week, CPI, PPI, other reports, that the risk at this point. And once again, I saw some nut saying he thought there was going to be some economists said it was going to be a V-shaped recovery, which is the biggest bunch of BS I've ever heard of. Because even if the market in itself has come back, there's no way the economy's come back on a V-shaped recovery, but we've already seen that where businesses are saying that even the people that they're going to hire, they're only going to bring back a partial amount of their staff. They're finding ways to go and do things with even less people. So, I mean, you've got less people that are going to come back, more people that are going to be struggling. How do you have that economy or economic numbers come back? So that's what I'm thinking, is that we've come so far, because even though you're starting to see news about the reopenings, generally the market will price those things in as it's a forward-looking thing, and we stretch this as far as it is. So most people think when we open up, it's not going to be as optimistic as people think. Or when they do open up, obviously, even with the social distancing, look at the restaurants. Many restaurants are stating that they don't even want to open because it's more cost effective for them to do the where they have the to go versus having the social distancing and having it at 30%. They can't make money if they have to have max 30%. So once again, when reality hits, and that's what I'm thinking is why I think we're going to rotate lower. I thought we were going to do it on Friday. They gave it one more extension here, but you can see here the good confluence here. So that is where we stand. That's the strategy. We are paring back here, getting back here into the SPOOs. And those charts that I shared, they were all done in the Asian session last night. If we call it last night, whatever. And obviously you can see it's now rotating lower. I was looking for highs to come in these areas, and you can see those all came into place. Whether you're looking at S&P, NASDAQ, Russell, Dow futures, you're seeing this roll over. All right, well, that's all we have. Thanks for joining us here at the European Crossover Webinar. Have a good day trading. We'll see you in the chat room later.